Hi everyone, welcome to Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Ontario, Canada. I'm in the business to become the Google map for investors seeking financial freedom. We're going on this journey with multiple TFSA videos to explore everything you need to know about tax-free saving accounts. In today's video, I'm going to go through a real-life example. I'm going to dive deep into how my client could have saved thousands of dollars in taxes if he invested his Tesla investment in his TFSA account. Before I get started, don't forget to like and subscribe to my YouTube channel. If you have questions, make sure you ask them below so I can get back to you. I'm also in the process of putting together a TFSA Playbook to cover everything you need to know about tax-free saving account. It will be ready by the end of the summer. To pre-order your copy, make sure you visit tfsaplaybook.ca. Now let's get started. A client of mine started investing in Tesla stock back in 2018. He bought 4 shares at $282 US each. That's roughly equate to $1,500 Canadian at the time. He then purchased one call option on Tesla in 2020 for $17,000 US before the stock split. In August 2020, Tesla went through a 5-for-1 stock split. For those of you who don't know stock split, basically if you own one Tesla stock before stock split, you would now own 5 shares at the same cost. In my client's case, he now owns 20 shares of Tesla with the same total share price, and his one call option is now split to 5 options at 1/5 of the exercise price with the same acquisition cost of $17,000 US. Well, many of you know after Tesla's stock split in August 2020, the stock price skyrocketed. It has gone up way over $850 US per share and is currently trading around $700 US per share at the time of this video. The call option is currently trading at $240,000 in total. He has made a capital gain of $235,870 in US dollars in a matter of a couple of years with very little investment. What would his tax implication be had he held his Tesla investment in his personal name? What would his tax implication be had he held his Tesla investment in the corporation? What would his tax implication be had he held his Tesla investment in his TFSA account? Now let's get started and look at what it looks like if he had held everything in his personal name. If you don't know already, the Canadian personal tax system is a progressive tax system. This means that the more income you report, the higher the tax rates. What you see in front of you is the combined federal and Ontario tax brackets and the marginal tax rate from taxtips.ca. The income between the personal tax exemption amount of $13,000 and $45,000 that you make, you are taxed at 20%, and that was the first tax bracket. This goes all the way up if you make anything over $220,000. Anything above and beyond $220,000, you're taxed at 54% in Ontario. This means that if you make $230,000, the last $10,000 of income, CRA gets to keep 53.53%, more than what you get to keep. For someone who already earns job income of about $100,000, realizing a $236,000 US profit means that he would need to pay anywhere between 43% to 54% income tax. The good news is that the profit that he makes is considered capital gain, and capital gain is only half taxable. If you dive deeper into the number, we have to first convert the purchase price into Canadian dollars at the time when the purchase occurred. Assuming the sale happened now, using the current exchange rate, we come up with a total gain of $317,593 Canadian dollars. Only 50% of the gain is taxable as the investments are long-term investments. Therefore, only roughly around $159,000 is taxable. Using 50% to approximate the marginal tax rate on $159,000, my client would be liable for about $79,000 of taxes. Not a bad return. After all, he still got to keep 238,000 Canadian dollars. But what if he invests in the corporation instead? How much tax does he owe? While corporation provides more flexibility, including income splitting with the lower income family members and potentially splitting with your future self. As a result, his combined tax liability between corporation and personal tax could be as low as 20% to as high as 50%, which is pretty much the same as if he earns the income in his personal name. So, his tax liability could range between $32,000 to as high as $79,000, which is the same as if he were to earn it personally. We aren't going to focus on whether you should set up a corporation or not to hold your investment in today's video. If you are interested in exploring the possibility of setting up a corporation, make sure you subscribe to our YouTube channel to get notified on our future videos. What if my client does this investment in his tax-free saving account instead? One thing worth mentioning is that you're allowed to purchase call options in your TFSA account. If he decides to liquidate his Tesla investment today, he would have sold everything for about $342,900, all in Canadian, in his TFSA account. He can then withdraw this $342,900 tax-free. The interesting fact is that this $342,900 that he withdraws, the TFSA contribution limit is increased by the same amount the following year. This means that he is eligible to recontribute the entire $342,900 to his TFSA account, continue to generate return on a tax-free basis in the future. Cool, eh? In summary, if my client owns these Tesla investments personally, he could be liable for $79,000 of personal tax. If he owns Tesla in his corporation, his tax liability ranges from $32,000 to $79,000. If he owns it in his tax-free saving account, he pays no tax, zero. If he chooses to withdraw the entire amount from his TFSA account, he can recontribute the higher amount back in his TFSA account the following year. So, what's the lessons learned here? First lesson is that if you are not using your TFSA account yet, make sure you open one and invest. Second lesson is that when you decide to invest in high growth stock just like Tesla and many other stocks, consider investing them in your TFSA account. This will help you save thousands of dollars of taxes. If you find this video useful, make sure you like and share this video. If you want to learn more about your tax-free saving accounts or tax tips in general, make sure you subscribe to our YouTube channel below. If you have any questions relating to this video, you can comment below and I will personally respond to all your questions. Thank you for watching.